a little bit a more detailed look over the whole picture in here, what we know so far, we can expect or see a lot more already. So, and let's look at it. First of all, we're having the structural points, right, which creates equal lows. We have also this equal lows created, this internal inducement to induce higher, but not even inducing this one, just inducing this internal structure in here, creating the equal lows in the process, right? Then again, goes lower, aims for the liquidity, induces it low, right? Again, now this becomes a proper inducement of the internal break of structures. For example, if there's a structure point in here, that's like an internal break of structure. You can use then to later for mitigation, or if you like the more obvious internal break of structure, like this point, right? Of course, in here becomes the decisional level you want to get mitigated. And again, you can take a look at the lower time frames in here, building liquidity in here, getting inducement low, mitigates the zones which you're already interested in after the internal break of structure, gets mitigation after the inducement. Of course, you take the buy inside here. With the understanding of that you have the inducement low side now, the external one, you should not look at the mitigation areas in this area as the liquidity is grabbed lower, and the next logical thing is to grab liquidity higher and then go lower first. Right? Again, it will make a lot more sense like very soon. But again, now this becomes a smart money trap. Again, trade tricks people on which thought that this is a break of structure, and they will taking this short in here, right? Because they don't know that this is a liquidity grab. They think it is a break of structure, as you asked the question, right? But how you will know that? Obviously, in a few slides after, okay? But as you noted, this is an inducement. You should not look at this area. This becomes a smart money trap. Again, gives the false reaction. And then, of course, aims for the liquidity again. Takes out all these people who are looking for the short, right? And even building this triple top in here, given a false direction. Final inducement, inducing everyone long now. And of course, now this becomes the external inducement. And that's how we easily can trade the mitigation of the inducement or of the internal break of structures. Of course, you expect the proper mitigation area with the imbalance inside to get mitigated. And after this internal break of structure, you trade in the order flow after that. And then the structure is normally the same way. The most important thing is that you're trading everything after these inducement zones. It's always the same cycle, and you just need to figure out where these inducements are and not getting tricked in thinking it might be a break of structure as you asked me in the question. But again, you make it very, very clean. But just show me, let me show you some examples to make it even more clear. So as you can see here, right, what do we have if we're starting from the left? Now, first of all, we're having this push upwards, right? And then, of course, this is the break of structure, the internal one. And that's the push that led to the internal break of structure. So this already becomes a valid point of interest for you, of course, to take short trade because you have the internal break of structure after this final inducement, maybe something to the left, right? And of course, what is going on here? Building up equal lows inside these areas. So building up liquidity in other sense, having this inducement area with the imbalances maybe on the lower time frames inside these areas, mitigates it, goes lower, of course, to grab first of all this liquidity, but also the external liquidity to even gives more lower lows. See, gives first a smart money trap, faking the false reaction upwards. But look at this huge candle again. That's the inducement candle that grabs finally this external zone. Of course, now this becomes our inducement. Guess what the inducement does all the time? Usually creates imbalances. So after, first of all, internal break of structures, right? You can take the mitigation, or you wait for more clean break of structures internally, like this one, right? So now you have an internal break of structure with this price action here. So guess what? You can trade the mitigation inside here. Now you're just trading the order flow back in the next areas, right? This becomes a smart money trap because you grab liquidity low side externally and obviously trading into the next liquidity zone, which is obviously this highs. There's a very easy trick to keep you out of these false areas in here. As you can see, this is get mitigated, of course, but this turns out a smart money trap, gives the false reaction. But what is before that? Building up equal highs, building up a triple top, doesn't shoot like instantly for this area. No, what does it do? it builds liquidity up here as well, induces low first. Again, people getting the short trade, getting breakout traders, whatsoever, seeing the false channel building, whatsoever, and then finally grabbing these liquidities, getting to the next area, which becomes the smart money trap area, gives the false reaction, builds this false channel again, and look at the huge speed, which grabs liquidity, now external again. And then finally, all the liquidity long side is grabbed, obviously building the whole buy trend in the process. And now, obviously, all the liquidity is grabbed. There's no more sellers into the market. That's why easily price can return now, and we're looking for shorts instead. And of course, the next target is the liquidity area again. What do they do before that? They're building up liquidity in here, right? Inducing those same liquidity areas, internal and also external. This becomes a very interesting point of interest for us, creating imbalances in the process. Obviously, not really gives a perfect breakout structure, but equal highs, which is obviously liquidity as well. And then, of course, mitigates that, and we can look for the buy trends after that.